All right, good morning then everyone as we head into European trade on Wednesday the 7th of February. We'll have a flick across markets and we'll see what's going on when we're kind of lacking this week. Fresh drivers, anything to kind of kick markets into gear and get markets going. For now, we kind of just seen a pullback across a lot of different assets, but Asia stocks gain, much riding on China's stability efforts. I mean, people sitting waiting to see if the Chinese stock indexes can continue or at least sustain their move higher. I mean, it's pretty hard for a stock index to sell off if the government just bans selling and then starts buying stocks themselves. So, I mean, the fact that it has not sold off yet is not too much of a surprise considering that the measures that they have taken, but we'll keep an eye on it. It's a bit of falsified strength though, and it's not strength for any sort of legitimate reason. It's just the state coming out and saying, or the state coming out and ordering the governing bodies of markets to not allow any more selling or restrict selling, and then saying they're going to buy stocks themselves. So, as I said, it's a bit it's not really real strength, is it? It's kind of a bit of a bit falsified, really, isn't it? I can't think of the word off the top of my head, but I think you know what I'm trying to say. Apart from that, really, this is kind of what I've been talking about the last few days, last couple of weeks, really. US dollar strength. We managed to had a look at a pullback, not last week, the week before, which ended up proving fruitful, but that was really only a technical pullback. Now I think we're getting the same thing. I mean, I have my reasons for thinking that the US dollar continues its move higher. We are getting, pretty broad-based US dollar weakness at the moment, over today, yesterday, over the last couple of days so far this week, but I still don't think it's over. I mean, you've still got sticky inflation across the US, you've got a tight labour market, you've got strong wage growth, you've got healthy consumer spending, you've still got manufacturing that's stable, just generally a stable economy in an environment of higher interest rates, plus yields have popped higher over the last kind of week or two. So, with all that, with a strong, stable economy, with interest rates where they are at, and even if they go and cut interest rates, they're still cutting interest rates into a stable economy. And as long as the economy keeps trucking forward with these types of numbers, it kind of reduces the need for any interest rate cuts. And with inflation still remaining a little bit sticky, not being down exactly to where they wanted to, I still do think there's a bit of upside left in the US dollar. When I think other countries, certainly the Eurozone, with that being euro dollar, you then look towards the dollar index, you look towards the Canadian dollar. I think these kind of central banks are closer to cutting interest rates than the Fed are. So, we'll keep an eye on that. Now, certainly, I mean, the UK is a bit more of a tricky one. I mean, inflation's a lot more sticky in the UK. The actual economy itself would call for cuts quicker than the US, but inflation's still at 5.1%. I think it was the core CPI print last time around. So, it's not really a figure of inflation that you want to cut interest rates into. So that's a little bit more tricky in sterling. I still think sterling's not a bad bet for upside, even though we have had pretty aggressive downside on it so far on last Friday and into today. Stock index mixed. There's not really a lot going on in stock indexes this week. You can see US equity futures, European equity futures, Asia Pacific equities just a bit all over the place. Some are up, some are down, but the ones that are up are not up by that much. The ones that are down are also not down by that much, so there's not really too much to see there. Oil's a bit sideways, commodities in general are a bit sideways. You can see yields, there's no clear direction across them. A couple of the US ones are up, a couple are down globally, then a couple are up, a couple are down. Again, there's just not really too much to see here this morning across any of the major asset classes. The US dollar is basically split down the middle, half up, half down. Again, not a lot to see there, but you'll see when we come around to the chart, certainly the majors are all giving back some gains from the from the dollar. Your Aussie, Kiwi, Kiwi had pretty strong employment data out overnight. I say strong, it's still, the unemployment rate still did rise, but it was expected to rise by 0.3, actually only rose by 0.1. Yeah, it's kind of like a football match where a team goes 1-0 up and then the other team kind of equalises in that case, if that analogy makes sense to you. Euro's relatively strong, but I say strong. The highest amount of percentage are up 0.16% or 0.14 now, so I wouldn't read too much into that. Sterling, a little bit of upside, but again, these are just upside, and the ones that are down by really not that much percentages. You can see once you jump across to the charts, there's just not a lot happening in today's session. That's your Aussie, that's your Kiwi, that's your Euro, that's your Sterling. Sterling has had a bit of an attempt higher, which is the one that's kind of going for it at the moment, but dollar Swiss, dollar CAD, dollar yen trapped in tight ranges overnight, and it shows a reluctance to kind of go either way. But I still do think, and I see kind of little double bottom on euro dollar, some inverse head and shoulders on your Aussie and your Kiwi. I still do think the dollar gets bought back into. I mean, whether that happens today, whether that happens tomorrow is another question, but I think you've got to just judging by the research, judging by what's going on in the US, you have to imagine that the dip gets bought back into, wouldn't you? I mean, we're in the business of making educated guesses, and that is certainly my educated guess. What that means for equity markets is a bit more tricky. I mean, equity markets just completely flat since NFP. Doesn't really know what it wants to do. Wouldn't surprise me if these trucked higher again. You've just got an economy that's performing well, and in relation to stock indexes, when the central bank come around to cut interest rates, they'll probably be cutting interest rates into again an economy that is performing well, and that's just good for stocks in it. So yeah, we'll see how that plays out, but I'd be reluctant to go and sell stocks. I'd be reluctant to sell stocks on any day, even if the whole world's crashing. So yeah, I mean, makes it a little bit tricky of a trade when they don't want to go up. I think yields have had a bit of a pullback, but after the aggressive move higher over the course of Thursday and Friday, I think that's warranted. Did have a bit of a pullback kind of start of the year, start of this year, kind of chopped sideways really this year, but yields have popped higher. 2 years back towards 5%, 10 years back above 4%. Yeah, they're kind of just hanging out at the highs here really, but they're not really selling off, managing to sustain the move. But the last 24 hours, there's a lack of movement across any of the asset classes, which means you've got to be careful. So not really a lot we can do, not really a lot that the calendar can say to us. Gotta kind of keep your money in your pocket, I think, until something goes and gets going. Pull back in the US dollar. I think it's just profit taking. I still do think you buy back into it. I think it's where you got to focus your attention. Nothing really on the economic calendar. House prices in the UK rose the fastest rate year over year for over a year. Maybe a contributing factor as to why sterling's popping higher, but ultimately, apart from that, you've got nothing. You've got inflation out of China tomorrow, which we'll have a look at when we get to it. But yeah, again, rest of the week, throughout the whole week, really, not much economic data to go off. Pretty quiet week. Can sometimes, or a lot of the time, can result in pretty quiet markets. So you can see pullbacks across the board. US dollar, I'd buy back into it if I was you, and that is probably my idea for the day. Choppy markets across the board. Maybe it's a day. Keep your money in your pocket.